Afternoon. This is Ash Cash, and welcome to Money Mondays with Ash Cash. As we are discussing today credit, I am going to share this video. So while we're going to start promptly at 12 p.m. So make sure you are sharing this video on your page, tag your friends, do everything that you need to do in order to allow everyone to get this knowledge as it relates to credit. It is the top of the year. Most of the time when we start talking about financial resolutions, a lot of it involves credit. It involves savings. It involves a lot of different things, but credit is one of those big things that if we're struggling with it, if we're trying to figure it all out, we start to tackle it as soon as possible. And I get a lot of messages, people asking me about credit all the time. And there's some misinformation out there. People are doing things what they think is logical as it relates to their credit. And I just want to make sure that I give you the way to properly build / fix your credit. And so make sure you tune in or tell your friends. So I'm going to share this on my page as well. So give me a sec. All right, come on, guys. 3 more minutes, and we'll get started. I'm excited about this topic. If you have followed me, if you know me, you know that credit is my thing. I love credit. I should be doing more of it. I wrote a book, What the FICO, 12 Steps to Repaying Your Credit. But there's just a lot of questions out there. Maybe in March, because March is Credit Education Month, I'll do some deep diving into credit, because there is a lot of questions out there. Things change often. There are a lot of misconceptions. There's just so much going on, and so I want people to understand how what affects your credit. And I want to, give you the right information, because again, there's just so much information where you can have this information overload, and you could be asking yourself, well, what is the right information, or what is, what should I know? And I just want to make sure that I arm you with what needs to be done. So 2 more minutes. We're starting at 12 noon. So make sure you share this video, tag your friends. We're going to take a deep dive into what does it take for you to build your credit, how to fix your credit. And so we're going to really tackle this today. So again, share. And then, so we're going to, I'll go quickly and give you 10 tips on how to build or fix your credit. And then you can ask any questions that you may have. I'll throw out my email address early, ashcash@bankmobile.com. So if you have any questions, because a lot of times I guess financial information is private and people may not want to ask these questions in a public forum, so you can always ask by emailing me, ashcash@bankmobile.com. Appreciate the like. Keep the love coming. I love the love. Give me the love. Give me a heart, man. Don't give me a like. Whoever just gave me a like, thank you. But you know what I mean? Can I get a heart? Can I get a, All right, we got 1 more minute, and then we're going to start. All right, 1 more minute. Share this video. Tell your friend to tell a friend. We are talking about credit today. How do you properly, I am emphasizing properly, because again, a lot of misinformation out there. So how do you properly build and fix your credit? This is one of the top financial resolutions is around credit. All right, so it's 12 o'clock. Thank you so much for tuning in to this week's episode of Money Mondays with Ash Cash, brought to you by Bank Mobile. If you have not downloaded the app, make sure you go to your iOS or your Android, download the Bank Mobile app. We provide a totally free banking experience. We are, here to financially empower our customers and those who aren't our customers yet, a whole generation. Today's episode, we are talking about how to properly manage or build and fix your credit. When the new year starts, people often give a financial resolution, which most 9 times out of 10 has something to do with credit, whether it's building credit, whether it's fixing credit, whether it is having debt and wanting to eliminate debt. There is a lot of information out there that people are taking advantage of, but not all of this information is good information. Not all of this information is right information. So I want to give you some tips on how to properly build and fix your credit. So we'll jump right in. Number one is you have to understand the basics of your credit report and your credit score. Do not just allow a company or person to tell you what needs to be done without you properly understanding how your credit works. This is the reason why people get into credit issue to begin with, because they do not properly understand the system. They do not properly understand the mechanism that is called your credit score. So I'll give you a quick course, right? Your credit is broken down into 5 categories, right? 5 out of 10, right? So 5 categories. And I call it the 35, 30, 15, 10, 10, 35, 30, 15, 10, 10, 35, 30, 15, 10, 10. What that means is 35% of your score is based on your payment history. So are you paying your bills on time? 30% of your score is based on your usage ratio. 15% of your score is based on the length of credit history. So how long have you had credit? 10% of your score is based on your credit mix, and the other 10% of your score is based on new credit. So to properly manage your credit, if you understand how these 5 steps work, you know everything. You know that payment history is 35%. So all I have to do is make sure that I pay my bills on time, and I do not allow any derogatory items to go on my credit report, like collections, items, things of that nature. That's 35% of your score. 30% of your score is based on your usage ratio, which means when you have a credit card or a revolving line of credit, how are you using that credit card or revolving line of credit? How dependent are you on it? Anybody who has a good credit score has 30% or less in outstanding balances. To have a great credit score, on average, it's 15% or less. So the lower you keep that number, the better it is as it relates to your credit score. But knowing that 30%, keeping your balances low is really, really important. I know somebody who I recently looked at her credit. She has perfect credit except for the fact that she is using too much of her credit card. She doesn't owe anything. I mean, she doesn't, have any derogatories. And because of that, she's in the low 600s. The moment that she starts to bring that down, because that's such a big chunk, that 30%, she starts bringing those credit card balances down, you easily talking about, mid 700s, great credit, only, because of that chunk, that second biggest chunk, which is 30% of your score. 15% of your score is the length of credit history. So how long, have you had credit? 10% of your score is based on your credit mix. So do you have different types of credit? And the other 10% of your score is new credit, meaning that are you applying for credit? The more you apply for credit, it stays on your credit report 2 years. So that negatively affects you. So that's the first thing, right? Is understanding how that works. Number 2 is know what now that you know how it works, get an accurate picture of it. So first get your credit score, right? Meaning that there are free places now. You got Credit Karma. You have, your credit card companies are now offering credit scores. So get your credit score. Know where you stand currently. Also get your credit report. You get 3 you get a free credit report each year from annualcreditreport.com. It gives it to you from all 3 credit bureaus, Equifax, Experian, TransUnion. So go and get those credit reports. Take a look at your report, see if your report matches up with what's supposed to be on there. But also know your score. If you go to Credit Karma, it is free. You could download or get your score. A lot of credit cards are now offering. Some banks are offering it. So just make sure you understand what your credit score is, but then also understand what score is being used, because there's Vantage scores, there's FICO, as I mentioned, there's all these different scores, but you have to understand what score is being used. The good news is that those 5 categories I gave you, the 35, 30, 15, 10, 10, regardless of what credit score model is being used, if you focus on those 5 categories, you're gonna be in the right space. Number 3, pay your bills on time, right? So I talked about 35% of your score being a big chunk of your your credit. So just make sure that you're paying your bills on time, because that's 35% of your score. No matter what, you should not be late on your bills. And this is, I'm not encouraging anybody to do this, but late as it relates to your credit means past 30 days. Right? So if you have, for whatever reasons, again, everybody's situation is different, but let's say, for instance, you're running behind on bills or whatever the case may be, and you can't pay a bill on time. When I say make sure you pay all your bills on time, I'm meaning that it does not pass 30 days late. Because if it passes 30 days late, that's when it hits your credit report. If you missed a credit card payment and it's 10 days late, your credit card company will charge you a late fee for it, but it's not going to be reported on your credit report. It's anything that's 30 days or more is when it starts to be reported on your credit report. The reason why I find it important to stress this is because people are like 2 weeks late and they're like, you know what, forget it. I'm gonna wait till next month, the next statement period. Do not do that, because the moment that you allow it to go 30 days or more, you are negatively impacting your credit score. Number 5, or number 3. Number 4, right? I kind of skipped. Pay your bills on time was number 4, but number 3 is establish a pattern of responsible credit behavior, and that simply just means that you have to understand first how your credit works, know your score, know where you are at the moment, but then also your credit behavior. Why are you using credit? For me and a lot of other financial experts would say that credit should be used on an emergency basis, right? So it should be used for emergencies. As you're building your emergency fund, you should, have credit available to you in the case of an emergency. It should be used to buy assets. Not to be, not to use to pay for gas, not to be used to buy clothes, not to be used to pay for everyday things. It should be used to buy assets. So if you're going to take out a mortgage that is going to help you, build your assets, an asset of a mortgage or an asset of a house, then yes, I would say, that is good debt to have. It's debatable. People talk about the value of school, but I still believe that school is really, really valuable. So if you're going to take out, credit, or if you're going to use a student loan to get an education to increase your income, then I say that's good. If you are starting a business and you're building your credit to take out a business loan, I say that's good. But just be responsible with credit. If you are going to use credit for other things that you're not supposed to use it for, at least make sure you're responsible enough to have a plan to pay it back. Number 4, we went through it already, which is pay your bills on time. Number 5, make more than the minimum payment on your credit cards, right? So as you're making your credit card payments and paying your bills, make sure you make more than the minimum payment, because as you are not making the minimum payments, you get into the cycle of owing more money in interest, paying more for the amount or more for the item than you're supposed to be paying. Number 6, don't start too many new accounts. A lot of people feel, and this is really, really important, A lot of people feel like as they're building their credit, they want to just open up all these different accounts so they can have more credit and more access and things of that nature. That is a red flag to credit bureaus. That is a red flag to your credit report. And so opening too many new accounts is going to backfire. It's going to negatively impact you. So make sure that if you are in the process right now of building your credit or fixing your credit, one account at a time is fine, because you want to build a pattern, you want to build a history, but you don't want to, as you're trying to do that, start applying for all of these credit, right? Because I told you earlier, 10% of your score is based on any new credit that you have, right? So if you have new credit, if you apply for a credit card, 2 points automatically get deducted from your credit report, and every time you apply for something, that deduction is going to happen. So make sure that you're not just applying for things. I have people that I sit down with, and the first thing they say is, oh, I'm going to apply for 5 secured credit cards, because a secured credit card is a great way to build your credit if you have bad credit or if you don't have credit at all. You don't really need 5 secured credit cards. If you have 1 secured credit card and you make sure you use that the best way that you need to use it, which is using 30% or lower, eventually you'll get real credit card offers. Wait. Don't be so impatient. It's going to take time to build your credit. So 1 secured credit card is fine enough. Number 7, start paying off your credit card debt instead of moving the debt around. That's important, because I see that all the time. People get offers for minimum balance transfers, things of that nature, and they just start moving credit card balances around. The danger in that is that you may have the ability to pay your bills right now. You may have the ability to to move stuff around, but you don't want to have credit outstanding unnecessarily, because as you have that credit outstanding unnecessarily, you are now working, or the money that you're making is now you're working for the credit card company, you're working for the bank. So you want to get to a point where you're like debt free, where the only debt that you have is debt that relates to any big ticket items, again, like student loans, like mortgages. I'm not really a big fan of financing cars. That's only because it depreciates at a fast rate. It's fine, as long as you are being responsible with that. Number 8, keep credit balances low in relation to your available credit. We talked about that. That's 30% of your score, so that's really, 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 really important. That's the second biggest part of your credit score. And contrary to popular belief, I'm hearing a lot of people say that you don't need a credit card to build credit, which is true. You do not need a credit card to build credit. But if you want good credit, you do need a credit card, because 30% of your score is based on your credit, your revolving lines of credit. So if you have no line of credit, just think that you're activating only 70% of your score, right? Because that's the second biggest part of your score is that 30%. So make sure that you have some type of revolving line of credit, and that you keep that credit low. 9, review your credit reports regularly. We live in the age of fraud, and we also live in an age of people wanting to do things fast. So there might be negative items on your credit report that that shouldn't even be there. And there are actually laws that work in your favor, that if you have sort of negative items on your credit report, or if you have false items on your credit report, or if you have mistakes on your credit report, they have to remove them. So make sure you're reviewing your credit report frequently to see is everything that's being reported on your credit report accurate? Because if it is accurate, or if it's not accurate, it has to come off. And lastly, contact your credit bureaus if you see any errors, because if you see any of those errors have to be removed. There are laws that are important to make sure that, or laws put in place to make sure that what's being reported on your credit report is accurate. One last thing that I want to say is, do not, when you start thinking about building your credit or fixing your credit, I have a lot of people who hit me in the DM that says, hey, I just paid X amount of money towards this debt. I want to build my credit. And that's the worst thing, not the worst thing, but it's not, it's one of those things that you don't necessarily have to do, because when you think about credit is about trust, right? Can a creditor trust you? And so let's say, for instance, if I'm trying to use a good analogy here, but let's say, for instance, you have a group of friends, right? You go to a friend's house and you see food in the refrigerator, let's say, right? And you steal the food out the refrigerator. You eat that food, right? And then afterwards, your friend finds out you eat the food and they're like, why did you eat my food? I can't trust you with food around the house, right? So now you go to, now you are, the word gets out that you go to people's houses, you steal their food out the refrigerator, so nobody trusts you, nobody lets you in their house, nobody leaves you around the refrigerator, by yourself, right? So now you're like, you know what? I want to repair my reputation with food. So the first thing you do is say, you know what? The friend that I've done something wrong to, I'm going to put their food back. No matter how long it took for you to realize that, you said, now I'm going to put the food back. I go buy whatever food I ate a year later, 2 years later, and I put that food in the refrigerator. Guess what? Your friends still don't trust you because you never repaired. You never showed them that you can be in their house with food without attacking that from the refrigerator. So the way that you build it is by getting one friend to trust you. So forget about replacing it. Yes, you can replace it, but what's more important than replacing it is finding someone who will trust you to be in the house without food. And then once they trust you now, then they say, you know what? Maybe he made a mistake in the past. Maybe whatever the case may be, I'll give her another shot. Hopefully I didn't lose you with the analogy, but what I'm saying is that if you took out credit and you messed up that credit and you owe a collection agency, yes, it's important to show that you are repaying back your debt. But even if you take that money that you have and you pay off that credit card or that collection account, you still have not shown creditors or the credit bureaus that you could be trusted because you have not established new credit. So I would say, instead of taking a lump sum of money and paying off collections, if you're trying to fix your credit, how about you take that lump sum of money and you go to a bank and say, hey, I want a secured loan. Give me a secured loan where you give them $1,000. Let's say that's the amount. You give them $1,000. They put that $1,000 away in an account and give you back $1,000. And each month you have to pay them back this $1,000. But now you take that lump sum that they gave you and now you pay off that collection. What that does is now you wipe that collections off your credit account, but now you've established a new relationship with another financial institution, and that is what's going to build your credit. That's what's going to help fix your credit. I cringe when people email me, when people text me, when people slide in a DM and like, yo, I just paid X amount of money for collect. No, because you have not, all you've done, you righted your wrong by paying what was owed, but you have not established new credit. Your credit report is based on your ability to pay back. So if you have not established new credit, you have not done what needs to be done to build credit. So make sure, that's a big point I wanted to make. So let me recap for you, then I'll open it up for any questions. Number one, understand the basics of your credit score, your credit report. Number two, get an estimate of what your score is, right? Credit Karma, you have all these different credit card companies and banks that are offering free credit. Establish a pattern of responsible credit behavior, so know when and when not to use credit. Pay your bills on time, which is important. 5, make more than the minimum balances or minimum payments on your balances. 6, don't open too many credit card accounts. 7, pay off your credit card debt instead of just moving it around. 8, keep credit balances low in relation to your available credit, which is 30% of your score. Review your credit reports regularly. and contact credit bureaus if you spot any irregular things on your credit. And again, last this is, I guess, was a bonus, is that make sure that you are not make sure that you are not just paying collections off just for the sake of paying collections off. You want to make sure that if you are going to pay collections, that you are paying collections based on establishing new credit. And another point to paying collections off, that depending on what state you are, the maximum amount of time that something can stay on your credit report is 7 years. So depending on your state, you might be paying something that's about to fall off your credit report anyway. So now you're wasting money. All right, let's go to these questions. Bass Moreno, thank you so much for the question. It says, how do you get rid of judgments on your credit report? So judgments it really depends, right? So it depends on the time frame that the judgments are there. So if you have judgments that judgments really stay on your credit report for at least 10 years. And so you may have a judgment on there that is that's going to stay the course of time. What I will say, and you ain't hear this from me, is that there is the onus of proof that you owe money or you owe something on your credit report is not on you. Meaning that just because something is on your credit report does not mean that you actually owe it. So there is something called the validation of debt, verification of debt, where any debt that is on your credit report has to be validated and verified, which means that if there's a judgment on your credit report, I would just contest it. I would just ask that whoever's reporting it on your credit bureau or your credit report, ask them to prove that you are the one that took out that debt. And they have to come up, or they have to be able to tell you, how did that debt come on your report, and prove that you're the person that took it out. And the reason why I say this is important, and this is a way to get judgments off, and again, you didn't hear it from me, but this is a way to get judgments off, this is a way to get collection accounts off, is because if let's say Macy's. I like using Macy's because that was my first credit card, right? But let's say you go to Macy's, you take out a credit card, you don't pay Macy's back. Macy's is not in the business of chasing you down. Macy's is gonna try to collect this debt that you owe them for at least 180 days, but then they're gonna write it off. And what they do is they're gonna sell that debt to someone totally different, right? And what happens is this new collection agency is now gonna start hounding you and harassing you, trying to get this money, but Macy's may have not given them the original application that you signed, or all the things that they have in their database that proves that you're the one that took out this debt. So now when the collection agency gets it and they're putting it on your credit report, they have to prove to you that you're the one that took it. And 9 times out of 10, they may not have that. So I would just say, challenge it. It may work, it may not work, but it's definitely a way. Those are the two options. You either wait it out till it just falls off your credit report, or you get to a space where you challenge it, and the onus is on them to prove that you're the one that took out this debt. Thank you for the question. Next question, James Hall says, do you have any openings for a meeting? I want to repair my credit ASAP. Shoot me an email, ashcash@bankmobile.com, and then we'll definitely talk about ways that I can help with your credit. So ashcash@bankmobile.com. Shoot me an email, James. Ahmad says, should I be paying off the collections at the same time as getting a secure loan, or do one at a time? Great question, Ahmad. So what I would do is, before you even decide to pay off the collection, just see how much time you have left on the collection, honestly. Let's say, for instance, there's a collection account that is 5 years old that's on your credit report. I would rather you not pay it, honestly. I would rather you just wait out that 2 years, because the longer a collection stays on your report, the less it affects your credit score. So I would actually just say for you to use that money that you would have paid off collection with, open up a secure credit card or secure loan, and start building your credit from there. And so by the time that 2 years is up, it'll just fall off, right? But if you have a fresh collection item on there, if you have a collection item that, let's say, is 2 years old, and you're like, man, that's going to be 7 years, 5 more years I might have to wait, then yes, I would say go to a bank, get a secured loan, and then use that money from the secured loan to pay off that debt. But it really, it's not just clear cut. It really depends on the situation. So just make sure you're taking a look at this actual collection account, and does it make sense to pay it off? The first thing to do that we think to do is to pay it off, but that may not be the best option for you. Darm Hanif says, thanks, Ash. I've used your book to bring my credit score up nearly 100 points in the past year, fighting my way to 700. No, I appreciate you. Salute. Thank you so much for that comment. Definitely with the FICO 12 steps to repairing your credit, it's really not, it's not rocket science. I promise you. Collection agencies or credit repair agencies, they try to make it seem like it is a difficult thing to fix your credit. No, it's not difficult. It is very easy. I have a lot of people that I've worked with, whether personally or who've read my book, who have really did it themselves and it really fixed. Like there's companies out there that charge you a monthly fee, a monthly fee to do things that you could actually do yourself. They wait it out for you, but you paying them. So make sure, at minimum, try to do it yourself first, and then if it's too time consuming or if your situation is too complex, then you need help, then hire somebody. But nah, you could definitely do it yourself. Let's see. Aniqua. Hey, Aniqua. How do I see what my credit looks like? I have no clue how to get an accurate account of my credit. So first, I would just say go, get a account with Credit Karma. Credit Karma is free. They will give you your score from two of the credit bureaus. So there's 3 credit bureaus. There's TransUnion, Equifax, and Experian. For whatever reasons, Credit Karma only does 2. They give you TransUnion and Equifax. Gives you a good sense of where you are. But apply at Credit Karma, CreditKarma.com. They'll ask you some questions to prove that it's you, but then they'll give you 2 scores. Keep in mind that the score is not your FICO score, it's your Vantage score. And Vantage goes up to 950. So there might be a disparity in score between 35 to 50 points, but either way, it gives you a good idea of where you are. So I would start there, but then also get a copy of your credit report. So annualcreditreport.com gives you a free credit score from all 3 credit bureaus: Equifax, Experian, TransUnion. So I would start there, and then go from there. If you pull your credit and you have questions on how what to do or where you are currently, shoot me an email, ashcash@bankmobile.com, or you could message me. But either way, send me a message. I'll take a look at it and I'll tell you where you are. All right. Looks like that's it, right? All right. Any other questions? What time is it? Oh yeah, we got 2 more minutes. So thank you so much, everybody, for the questions. This was awesome. Definitely, share this video, because I drop a lot of knowledge on there. So share this video on your page, tag your friends on it. But definitely remember, if you have any questions, send me an email, ashcash@bankmobile.com. Tune in every Monday. So every Monday at 12 p.m., we are doing Money Mondays with Ash Cash. Let me know what topics you want to talk about. If you want me to take a deeper dive into credit, I will, because there's bankruptcies, there's so much other things that are involved. There's foreclosure, there's so much stuff. So if you want me to take a deeper dive, I'll be able to do that as well. But definitely thank you so much for tuning in. Share this video. Tune in next week. Next week, same time, same place, 12 p.m. Money Mondays with Ash Cash, brought to you by Bank Mobile. We are providing a financially empowering banking experience. We have totally free accounts available, no overdraft, no ATM fees. So check us out. Go download it, right? At minimum, download the app. Check us out. But I am Ash Cash signing out. I'll see you next week, same time, same place.